Good day, everybody. Sergeant Crypto here, Crypto Team 6. The purpose of this video, I get a lot of questions. How do you trade? How do I do technical analysis? What's the secret? Well, the reality is there is no secret. I use a few simple rules. The rules are here, and I'm going to go over them real quick. I'm going to make this video pretty short. Before we get started, if you're interested in learning more about technical analysis, like and subscribe to this channel. Take a look at the description below. You'll be able to communicate with us. I run a group. My name is Sergeant Crypto. I run a group of crypto traders. They're worldwide. They're every race, religion, sex, age. Traders are all different. You can catch up with us on our Facebook page or on a Telegram channel. Just take a look at the description below. But anyway, let's get to it. People ask me, how do I trade? I'm gonna just give you 3 simple rules. They're really simple. If you can just master these 3, you'll greatly increase your odds of being a better trader, because they have to be in the forefront of your head. So many people trade by just throwing darts at a board or working with tips or whatever. There's no rhyme, there's no reason, they have no plan, they don't know. They just have no plan. They don't, they're just throwing darts at a board. So here's what we're going to say. How to trade crypto. Follow the 3 rules. They're really simple. First one is psychology. Psychology is just having your mindset correct. I mean, half of trading is having your mindset correct. I mean, you have to understand fear and greed. Fear and greed are the biggest killers in crypto or any kind of trading. I've traded commodities, stocks, bonds. Fear and greed are the same in all markets. Fear is when everything's going to hell. You've way over traded. You got all your money in one thing, and it's going down, and you're just, you hide under the bed. You don't know what to do. And greed is what they call FOMO, where you start chasing markets. You think, oh, I'm missing out. You jump in. Or you're in, you got in at a good price, and the price is up there really high, and you're thinking, oh, it's going to go higher, it's going to go higher. Those 2 pieces of psychology alone will kill you. Fear and greed. So understand them, and you'll know them when you feel them. If you're feeling greedy, go back to this video. If you're feeling fearful, go back to this video, because you're doing something wrong. You should never feel fear and greed. These trades should be surgical. You should not have any feeling about any trade. You shouldn't fall in love with any crypto. You shouldn't hate any crypto. You should be indifferent to it. You look at a chart, you decide, is it a good buy or is it a good sell? That's all you want to know. The next thing you need to know is, I see this a lot, it's called revenge trading. Revenge trading is when you get into a trade, it goes against you, you sell out, maybe you sold out at the bottom or whatever, and you think you're going to make your money back, so you try to get in to make some money back. You sold out, you buy it back in, and you think, I'm going to double my money here. Revenge trading is a killer as well. You don't want to ever revenge trade, because when you start revenge trading, you start throwing more money after more money after more money. Once a trade's over, forget about it. If you miss a trade, forget about it. If you made money on a trade, forget about it. It's booked, it's done, move on. Another part of psychology is never trade under duress. I see a lot of traders who are trading to make their car payment. They need money. So, in order to make money, you got to get in there and trade. And they force mistakes that way. They trade when they're angry, or fighting with their girlfriend or their kids, or something going on, or they're trading drunk. You have to have a clear head to trade. You have to be able to control fear and greed, revenge, and you can't trade under duress. If any of those exist, just turn the monitor off. Because when you come back, you're still going to have your money. So that's the first rule. Psychology. Have your head right. If your head's not right, don't even start. Don't even get in. Okay, now that your head's right, you're ready to go, what do? You get in, you want to trade, but you have to manage your money correctly. Because here's the cardinal rule. If you lose all your money, you're done. There is no more trading. You have nothing to trade with. You're out. So money management is a big deal. Now, so what does that mean? Money management means don't lose all your capital. Now that's easier said than done, but the best way to start with that is always remember to trade small. Trade small. Don't put, it's not an, I'll tell you what, you might go all or nothing on 10 trades in a row and quadruple, 400 times your money, but sooner or later, you're going to get blown out of the water. You're going to lose it all. And that takes us back here. If you lose all your capital, you're done. So trade small. I enter the market with market orders. I don't look at a chart and say, if it goes here. I do sometimes, but for the most part, if I'm looking to do a trade right now, I make it right now. I don't pick at market orders. However, if I think there's a good price somewhere to be made and I can't sit there and watch it, I'll place a limit order. But most of my limit orders are stop losses. So anyway, I enter with market orders. I don't sit here and look at a chart and go, boy, I'll tell you what, 2 more Satoshis, 3 more Satoshis, and I'm in. 3 more Satoshis in the bigger plan, they don't matter. All right, so just place your market orders. You're in, you're done. Now, part of money management means, and if you don't want to lose all your capital, it means you put no more than 5% in any one position. Now, CoinMarketCap will list all of the cryptos that are available to trade. If it's not listed in CoinMarketCap and it's on a closed exchange somewhere, I probably won't trade it at all. But when I'm dealing with the top 20, I don't put more than 5% in any one coin. That includes Bitcoin. I mean, if you've got all your money in Bitcoin or half your money in Bitcoin, you're risking. You're risking losing a lot of capital on these big market moves because these markets are very volatile. So no more than 5% on any one position in the top 20. Now some others, they like to speculate on these ICOs and these altcoins, and they know, wow, I can make 10,000 times my money. Well, you know what? You can lose 100% of your money, which brings us back to money management. If you lose all your capital, you're done. So put no more than 1. You can stretch it and go to 2% on any altcoin or any ICO. And I realize that for some of you, that might be not a whole lot of money. But again, if you lose all your capital, you're done. And if you do hit it big on one of those, your capital will grow so big that your 1 and 2% on the next bunch increases. So remember, if you're making money, your 5% gets bigger, your 1% gets bigger. So those of you who have, $100 or $1,000 or, $10,000, whatever your position is, 5% on the top 20, 1% on the lower, the alts. All right, we're all in this to make money, and the only way you're ever going to make money, I see so many people, hold on for dear life. Hold on for dear life. Well, how long do you hold on for dear life? I mean, if you hold on for dear life, what do you got to wait till you die to take your profits? In my position, I look at trades in a pretty practical manner. If I make 100% gain on my money, I sell half the position and let the rest ride. Now, you might say, oh man, you're going to really miss out on a lot of good deals. You know what? I sure am. But if I sell out on 100% gain, let the half ride, and it goes down by 60%, well, that 100% is still sitting on the sideline. That the profits are still sitting on the sideline. I can go back and get more, while the hold on for dear lifers are just looking for a place to get out. And when you're looking for a place to get out, I'll have my profits off to the side to take your hold on for dear life money that you didn't capture, and I'll make money again. But again, we don't revenge trade. So if you made some money 100%, doesn't mean it's going to go back up. You have to really look at your technical analysis, which we'll talk about next. The next thing is to use stop losses, and set them at the same time that you trade. So if you do a market order, let's say you're buying this Ethereum here, and you're up here, and you buy it somewhere in here. You're not sure if it's going to continue because it's had a good rise. If you don't see this half of the chart here, you're not sure if it's going to continue to rise. It crossed here. It could easily have gone lower. And so you want to put a stop loss in here. Where is it going to be? Well, your risk tolerance will tell you that. I can't tell you where to place your stops. I can tell you I generally place my stops around consolidation areas. Like say this is a consolidation area and I was buying up here. If it breaks below that consolidation area, it means we're probably going to go lower. So I'll put my stop just below all of the support in this case. This is called a support line. I would place mine just below that. So if it breaks support, usually it's look out below. You just fell off a cliff. So that's stop losses. Now, technical analysis. People say, how do you read a chart? What do you look for in a chart? Well, I look at some guys, and they have charts, and gals, and they have charts with every kind of indicator on it. I mean, they've got spaghetti soup. They got Bollinger Bands. They got this band, that band. They got, Fibonacci. They got all sorts of stuff on there. Me, I keep it real simple. I'm only interested in, because the reality is, people ask, what is the value of this coin? What is the value of this security? What is the value of this commodity? And the reality is, it's what somebody is willing to pay for it right now. Not what it was yesterday, not what it was 3 days ago, and not what it's going to be 3 days from now. It's right now. When you go to the exchange and hit the submit button, that's what it's worth. Nothing more, nothing less. So keep it simple. I look at price. I look at volume. Volume is an indicator. If volume is an indicator of how many buyers and sellers are out there. If there's not a lot of volume and the price is going down, well, maybe you don't have to worry so much. Or, but if the price is going down, you should be concerned. But volume is a big indicator. If you've got a price rising and a lot of volume, that means there's new buyers coming into the market. If you have price falling and the volume is rising, that means you have a lot of sellers in the market. So I look at price, volume, and then I look at moving averages. Now, I use 2 sets of moving averages so I can kind of see what's going on short term and what's going on longer term. Moving averages that I use are, what are they in this case? I'm using 9 periods. So for the last 9 trading sessions, you can see this is Ethereum here. In this little trading stretch here, for 9 sessions, it traded above the moving average of those 9 sessions, meaning it was very, very bullish in that short period of time. This is a 26 period, so over 26, these are 4-hour bars. So over 26 4-hour bars, it traded above that. So if the price is above 26 and above 9, that's generally a very bullish signal. Now you can tell when a bull run is going to end by when the price crosses below one of these moving averages. All right, so here's a signal right here that things are slowing down a little. If I were trading this and it crosses that 9 bar, I would probably take some profits there. I don't necessarily, when I'm trading, I I'm not either all in or all out. I'm in, and then I'll take some profits, and then if it goes lower, I can look for a new opportunity to take the profits that I had up here and get back in. You see what I mean? It takes a while to get this, but you watch this video a few times and you'll see how this works. Now this is Ethereum, and people would ask me right now, well, okay, I'm looking at the chart. What do I do right now? What do I do right now? Looking at this chart, this is a capitulation point right here. What we have is we had a nice huge run up here, and then the price sold off. This is profit taking. Volume was heavy. Where do you buy back in here? Well, when the price is falling like this, this is the rule here. Never. Where is it? Where is my rule? Never buy a low. You know what I mean? So the price falls here. You never buy a low. And the reason that you don't buy a low, because it can go lower. And that's never good. It can go lower. So what we do is when we buy, we want to buy high and sell higher. All right? So I keep it simple. Price, volume, moving average. And I buy high and sell higher. Never buy a low. All right? Buy high and sell higher. Okay, so here was a low. The price is now higher. I expect it to go higher than that. So I'm not buying a low if I purchase right here. Actually, I'm buying what I hope to be a continuous setup here. I'm buying what I believe the price is crossing these two moving averages, which means we're getting ready to trade if this carries above the moving averages again. And that's a very bullish sign. So if you were to ask me what would I do with this at this right moment right now, I'd place a market order here for Ethereum. Is that yes, Ethereum at 0.09 BTC. I'd buy it right here. And if you were to ask me where would I place my stop, well, here's our support. This is where the lows have been over a period of time. So I wouldn't set them above these. I'd set my stop right here about 0.828. And if the price crossed that, I would be out, and I will not catch a falling knife. I won't buy it as it goes lower. I won't buy it all the way down. People buy it all the way down. Buy it, buy it, buy it, buy it, buy it. What you end up with is a big bag of highs that where you purchased everything above the price. So you have to let it fall, and then you have to let it kind of consolidate, and then you have to look for another setup. And part of revenge trading is not getting back in until you have the signal to buy. And the signal to buy will be written in the chart. And it'll be written in price, volume, and moving average. If you keep it that simple, that's how it works. I'm Sergeant Crypto here. If you're interested in learning more about trading, like and subscribe on our Facebook page, or subscribe to this channel. I'm Sergeant Crypto here, Crypto Team 6. Good trading to you all. Out.